Hello everyone. Today we're going to have a brief market recap, then talk about the US trade data, the JOLTS job openings, and Japan's current account. Then I'll run through today's trading ideas. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my opening market comment. Well, the dollar is opening kind of mixed in Europe. Trump's statement that Congress might not repeal Obamacare until next year drove home the point that even the highest priority actions of the new administration will take time to accomplish. This has caused Fed funds rate expectations to be pared back and the dollar to weaken somewhat, particularly against the yen. However, the euro fell even more on a dovish speech yesterday by ECB President Draghi. Also, there's been a lot of negative European political news. French presidential candidate Fillon is struggling, which is a boost to the anti-euro candidate Le Pen. And there was a poll out that suggested Germany's SPD would beat Chancellor Merkel's CDU if an election were held today. Now, overnight, the Reserve Bank of Australia left rates unchanged as expected, but the statement was slightly more hawkish than I had expected. Still, the probability of a rate hike this year rose only a tiny bit, indicating that most investors didn't change their outlook very much. The Canadian dollar was the worst performing currency overnight, probably because of the sharp decline in oil prices, which fell ahead of this week's oil inventory figures, expected to show yet another rise. As for today, we already had a very disappointing German industrial production figure. Output fell 3% month on month instead of rising as expected. Today, the U.S. trade deficit's forecast to remain pretty steady in December. The figure usually isn't market affecting, but investors might start paying more attention to it since the Trump administration is making such a big deal out of the nation's trade position. If they do, then this figure might be negative for the dollar, as it's a pretty wide deficit, at a pretty wide level. On the other hand, the Job Opening and Labor Turnover Survey, the JOLTS report, has figures out on the number of job openings available. Today's figure is forecast to be little changed. That should be encouraging and positive for the dollar. Now, Canada announces its merchandise trade balance and building permits at the same time, so it'll be hard to differentiate their market impact. This is troubling because the two are expected to give opposite indications. The trade balance is expected to remain in surplus, but building permits are expected to be well below the recent trend. I expect that the trade figure will be more important, and therefore I'd expect the indicators to be bullish for the Canadian dollar. Overnight, Japan announces its current account figures. The surplus is expected to fall slightly, which could be negative for the yen if people are paying more attention to this data nowadays. So, my trading ideas for the day. The euro may weaken further because, as I mentioned, it's already struggling from political fears and monetary policy divergence. And this morning's German industrial production data was a huge negative surprise. So I don't see anything to turn it around for now. On the other hand, the counterpart to European weakness could be yen strength. A risk-off environment should benefit the yen. Furthermore, there's talk of Japanese investors selling French bonds owing to the political outlook there. Finally, as I mentioned, the Canadian dollar was the weakest currency overnight, but this afternoon's Canada trade data may cause a rethink and encourage Canadian dollar shorts to close out their positions. That could boost the Canadian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.